Hey, everybody, welcome back to the Big Dreams, Great Teams podcast. I have a fantastic guest today on the podcast who is going to help us tackle something that impacts our business growth, and that is our finances. Lisa Turner is the founder of Accounted for You, which is a zero only bookkeeping practice based on the Gold Coast. She has 20 years of experience in finance and accounting and 8 years running her own business. And she is super passionate about making numbers feel simple, and she works with female led e commerce and service based business. So, what's awesome about Lisa and her team is that they provide tailored bookkeeping support with streamlined systems, but in a way that's clear and jargon free. And so I've invited her onto the podcast because I know from working with so many business owners that understanding your numbers is absolutely critical when you're growing and scaling, but it's also the area that causes lots of stress and often gets pushed to the side. So today we're going to unpack the common bookkeeping mistakes that lots of businesses are making as they scale to seven figures and beyond. And just as importantly, we're going to talk about how getting this right can become the foundation for growing your team, getting yourself proper support as the business owner and CEO, and ultimately earning you more profit. So, a very big warm welcome to you, Lisa. Thank you for being here. It's so good to have you.
Thanks for inviting me on, Paula. I've been so excited for this episode.
Yay. Before we dive into the nitty gritty of all things bookkeeping, I just want to hear a little bit about your own business journey. What led you to start Accounted for You, and what has that sort of growth looked like for you?
Well, a scenario that I know is quite common. I started Accounted for You when I decided I wanted to support my family, but still be able to go to school, do the activities with them, and have flexibility. So, hence, the business was born so that I didn't have to rely on going to work and daycare and all the things. And with the growth, it certainly hasn't been linear. It's had lots of ups and downs, mostly by choice, because I did the solopreneur setup for the first few years until I was constantly booked out and working insane hours. And I had to decide, do I close my books or do I build a team? And so I'm really grateful I decided to build a team, and I have such an amazing team. And we've had a few growth years and also a few status quo, depending on what our goals are.
Amazing. Oh, thank you for sharing a little bit about the behind the scenes of your business because, I guess that's what it's all about, isn't it? Sharing information and really supporting each other to grow. So thank you for starting there. Now, I noticed that you work specifically with female business owners, and a lot of people listening are female, not all of them. But what are the common attitudes or approaches that you see to finances when it comes to the people that you're serving? So the females, and you said e commerce and service based businesses.
Yeah, it's really wide and varied, but some of the common ones are that people might not want to talk about. So I thought I would share some of those ones so people know it's not just them and it's extremely common. One of them is overwhelm, and so then avoidance. They think because they're running a business, they should know all these things and be across it. So when they're not, they get overwhelmed and tend to avoid it and not do anything about it. Another common attitude or approach that I find is fear of judgment because it's finances, because we're trying to build our business. We don't want to be seen as unsuccessful or not selling enough or not keeping the books tidy or not clever enough when it comes to numbers. And that's just not the case because it's not something you're born knowing. So it's important to help business owners know that there's no judgment when you're working with the right people. So that is a common attitude where they feel like they're going to be judged and they should not have to worry about that. And another one is they're hesitant to outsource because they've had lots of bad experiences or don't actually know what they can outsource and what this might look like. So they just hold back and don't outsource. One good approach or attitude is on the flip side, I do get to work with some really great growth mindset business owners that have made the decision they really want to dive in and invest and grow their business.
Love that. And I know that certainly all my clients and most of my business friends, everybody's so highly capable and always highly performing and can do all the things that I can totally relate to when it comes to money. If it's something that you don't feel like you're all over, or maybe it's not, this beautifully positive big profit number at the end of the day, that there's a lot of like, I don't know, I guess guilt or shame or something like, I should have this sorted too.
Yeah, and there shouldn't be that because that's what all the experts are for, to lean on and get help for that kind of thing.
Plus, I guess you can't make profit all the time. You can't, it's incredibly hard, isn't it, to invest in growth and actually always be profitable. But if you don't know that, you don't know that.
Exactly. And if you don't know what your numbers are, not looking after them, you don't know what to look at, you don't know.
Love that. Thank you for sharing that. So, not talking about money, feeling overwhelmed or avoiding it, fear of judgment, and a hesitancy around outsourcing. So, yeah, it was super interesting and completely relatable. So, one of the things that I notice with a lot of the clients that I work with is people not necessarily paying themselves either properly or at all, especially when it comes to growing. And I feel like then they get stuck in a cycle of like reinvesting everything back into the business. And then, particularly if you're hiring, you're paying other people more than you're paying yourself. Let's talk about that. What's your take on it? Should they be doing it? Is there a minimum you should be paying yourself? Tell me all the things.
It always depends, but I absolutely find the same. You would be surprised how many sole traders get up to the big revenue numbers and there is little to no profit, which means there's no money for them as their income. And even when you're operating as a company structure, while it's great to reinvest back into the business from time to time, if it's helping you reach your goals, you can't do this long term. And I've started working with clients already doing those 6 and 7 figures with a team. And as a director, they're not paying themselves, only everybody else. So, in a growth phase, it should look very different than those early startup days when pretty much everything gets reinvested. When you're in growth phase, you want to continue paying yourself and save profits and invest that. But absolutely, you can reduce your pay or pause it. But my advice is to make it temporary and set a timeline or a goal of when you'll be restarting or increasing your pay so that it doesn't go on long term. Because, as always, with anything financial, it depends on your own situation and what's happening. So make sure to get that goal and deadline to get yourself out of the cycle, or what steps you'll take if you do get stuck in it.
Love that. It's also something that I find from a performance perspective can fuel resentment and often really high expectations for your team members. Because if you're paying yourself like something that feels too little or not at all, and then you're paying somebody else what comparably feels like a lot, then there's that constant conversation in your head like, well, I'm paying you this, so I expect this, or you should be doing this, et cetera, which isn't necessarily unreasonable, but it's not necessarily the healthiest conversation to be happening or bubbling under the surface.
No, and you don't want to get in that situation because it puts too much pressure on yourself and on them because you're the business owner. You're always going to have higher expectations on yourself than what the employee is going to do. They're always going to try and do their best, but it's a completely different expectation in terms of results and work that they will get done. So it's a dangerous place to be in comparing those wages and does build resentment. So
Absolutely. Okay, so then let's say the business is growing and we're not necessarily paying ourselves, the big bucks yet because we are reinvesting. And then this new pressure comes in to hire, maybe to hire more people or to hire, your first couple of people. What's the basic good financial like knowledge that you need to have so that you can make those hiring decisions not from a place of fear, which is something that I see happening all the time. Is that, as I started to say, that thought process like, I pay you this, it's going to come out of my pocket. We're not going to have enough. Oh, I'm going to put extra pressure on you then as someone I'm hiring. So, what's your experience and what do you recommend people do to be able to hire and to hire from a place of confidence rather than like fear?
absolutely. That is a extremely common problem. People feel the pressure in the growth and they hire too fast. So the wrong person, which is something you would be well across because they don't look at the financials and work out, is now the right time? What other things do I need to have in place? Because oftentimes a first hire, they also think I can't afford someone expensive as my first hire. So I'll pay the lowest. And while that is not a great business strategy, what the very first step should be is while you're super busy and seeing loads of top line revenue, you need to make sure all your numbers are up to date and accurate in your bookkeeping to make sure you're making a good business decision to hire, because it's not only the hourly rate you're paying the employee, it's their super, the workers' comp, training time. You need tailored legal contracts. So, my advice would be from a financial perspective is to make sure you know your numbers, they're accurate and up to date, so you can use those as a a guide. Is hiring a person the right thing to do, or have I got too much expenses first and I'm not going to be able to afford all the other things that come with hiring a team?
That's such a good point because often we just focus too much on that hourly rate and then we get surprised at the end of the quarter when it's like, pay super, or hey, the fact that I've had to spend all this time with you means I can't go and earn this revenue, etc. So that leads me really nicely into, I guess, how important it is that we actually, yes, as you said, understand the numbers, but also understand what's realistic that the person can do in the first week, in the first month, and what training them is going to stop you from being able to do. And I guess, part of my work, as you know, is to get really strategic about how do we train them in the stuff that they can do on their own as soon as possible that's going to bring you in some value so that we can then not panic when we have to pay their wage or pay their first invoice, let alone their super payments and the other things that come along, or they take holidays, et cetera, et cetera. So let's talk about then those essential elements. So, what are the essential elements that all business owners need to think, okay, I'm sorted if they have these done?
Look, this could be quite controversial, but a non negotiable for me when you're in business is to use accounting software. We don't work with anyone who wants to stick to spreadsheets in my practice because if you want to run a business, you need to track your financials accurately. Don't get me wrong, I love a good spreadsheet, but it's manual and it doesn't do the job software is built to do for you. I could go on for ages to share all the ins and outs of everything, but if you're running a business and you want to be professional and grow, accounting software is one of the absolute essential elements. And I think every business owner should at least have a basic understanding of what is involved in the financial side of their business and what their legal and financial obligations are. It's not as simple as I'll start working and I don't have to worry about the details because there's lots of things you have to do on the back end as well to make sure you're covered. I do have a learning hub launching soon, a rebrand of a foundations course I used to run covering all these basics. What's a profit and loss report? What does my invoice need to have on it? I think every business owner should have some sort of financial overview before they use their ABN so they understand what's involved in running their small business.
I love that. And if you're sitting there thinking, I'm already using my ABN and I don't know these things, the best time to look at that is now. And also, just to share a little bit about what I know happens is I've had clients who are sort of, you know, 600, 700, 800,000 in revenue. So they've grown to that and they just don't know what they need to know about finances. They don't understand about BAS. They don't understand the difference between PAYG. What are these quarterly bills that come in? What are my obligations, et cetera, et cetera. And there's no shame around that. It's just one of the things we just need to learn. So I love that you're sort of saying you need to know what a P&L is, profit and loss. You need to be able to read it. And you need to know, well, what are my legal obligations, which is probably your tax obligations as well? And what is GST? When does it kick in? What's my GST obligations? What do I need to report on? And I guess so that you can sleep at night and know that there's not any sort of big surprises looming around the corner. So I love that you've got a learning hub of these sort of, I'm going to say basic, but not basic in a way like they're too basic, but fundamental things that we just all need to know.
And you need to know them. It's not optional.
Yeah, amazing. One of the things that I get frustrated, let's say, I won't go down the path of having a rant, but I get really frustrated because, having done an accounting qualification and studied it at school and worked in banking myself, a lot of this stuff I know is second nature to me, which is not the case for everybody else. And when I see lots of business coaches and consultants talking about figures, the lack of clarity around, are we talking about sales? Are we talking about revenue? Are we talking about profit, et cetera, et cetera? So I really think that it's also important to talk about the fact that many of the people we're looking to and learning from aren't specifying. So that's also not helping you to learn this language that we need to know, which is profit and loss, income, sales, revenue. What is it? Expenses going out. When do we pay tax? Is that, profit, et cetera, et cetera, et cetera.
Yeah, there's so many acronyms and special fancy words.
Absolutely. And it's tricky. It's almost like talking about Facebook ads or click rates or engagement rates is easier to understand because everyone's talking about it compared to, yeah, profitability percentage, wage percentage, and all that sort of stuff.
Yeah, and knowing your click through rates and your return on ad spend, all those marketing numbers to know are absolutely important, but they're only a tiny piece of how healthy your business is. It doesn't mean everything after that is doing well.
Okay. So let's jump down then because there is confusion. Can you clarify that for us? What is the difference between revenue, sales, profit, cash flow? How come sometimes we feel like, in theory, we're profitable, but there's no money in the bank? Break all that down for us. Give us your wisdom.
It's such a great question because so many people honestly don't know. And this is not a reflection of them. It's that it's not something you innately know. You have to learn it. And so if you don't know it, you can't know it. So, first off, revenue and sales. We hear that all the time, and they are the same thing. It's your top line sales figure, the total amount of sales you made, the money coming in the door. Your profit, which is completely different, is what you have left after all your expenses. So, your total sales less all your expenses, all of them equals your profit. And this is what is important. You need to have some profit left over at the end. Another term that people hear is cash flow, and it's the money moving in and out of your bank account. It's actually good for money to flow both in and out of your bank account. It's the way it's supposed to be. So you want to know how much money you have coming in and how much going out. So if you have enough cash flow to cover it, because even profitable businesses can run out of cash if the cash flow isn't looked after, such as chasing up overdue customers and paying your own bills on time. So there's some of the main things that people get confused and it's talked about, and profit isn't talked about enough in the world of social media and things. And I see it all the time, and it's so frustrating to see all the social media posts talking about 6 and 7 figure businesses. This doesn't tell you a thing about how healthy or profitable they are. They could only be making $1 or worse, a loss. So I don't think people should chase top line revenue numbers unless they know all the other numbers and it flows down to a profit at the bottom and they know what to do goal wise to reach those numbers. Because, yeah, on social media and all the platforms that we're looking at, revenue is not what you should be chasing.
Love that. So all revenue does is really reflect the volume of the business, I guess, and actually how much expenses are being paid out of your bank account to achieve that volume of sales is just as relevant, but that's not talked about. And so then you sort of said, so then that becomes your profit. And I guess in my mind, there's also, but you can't spend all that money because some of it has to go in tax. So then you've got your profit before tax and your profit after tax figure. Because I've seen that get confusing as well, where, business owners will pay themselves the profit or think, oh, goody, I've got $10,000 profit this month, this year, whatever it is. I'm going to put that in my pocket. And then we see a tax bill later on. I was like, oh, actually, the tax man or lady wanted a little bit of that. And that's what it can get tricky. Okay. And so then you said cash flow is the money going in and out of your business. And I guess, do you see the problems happening there because we're not chasing cash flow, like we're not following up, getting our invoices paid?
Yeah, that's a huge problem that I see where businesses are in that growth and scale mode and they're so busy doing all the busy things, they forget about the admin, they forget to send out their invoices or they forget to follow them up. They have a bill to pay and go, oh my God, I have no money in the bank. And then they think, what's wrong? And it could be you haven't chased up what's owed to you. And they're using their bank balance to make rash decisions. And on the other side, like you mentioned, they see money in the bank, so they spend it and take it without knowing how much of that they should put aside for tax.
Mm. So I want to make sure we sort of don't go into like financial strategies or anything that's sort of beyond what's appropriate for you to feel comfortable talking about. But, are there some sort of quick tips that you can suggest here? Is it having multiple bank accounts? Is it just starting with knowing your numbers and siphoning stuff off? Do you have any thoughts around that you're comfortable sharing?
Yeah, absolutely. Two bank accounts are a must for every business owner, one for your normal operating income and expenses, and another account for savings for profit for taxes so that you can put that money aside and know that can't be touched. That's not your money, it's the ATO's money or your profit. So that is something that helps a lot of business owners so that they move the money aside because, and particularly working with a lot of creatives, they're very visual, they see money in the bank, great, I'll spend that. Whereas if they have a nominated savings account and they're regularly putting the money aside, it makes it harder to use and get stuck in a really difficult position when that big bass bill comes in.
Love that. Actually, to share personally, that completely changed how I felt about my finances and actually how the decisions I made. And I've actually got 3 bank accounts. So I've got an operating expenses bank account, a tax bank account, tax and super, and a profit one. And so I sort of siphon it off. And it was really interesting opening the profit one and making myself put a percentage over because I do a fortnightly sweep. In itself was also a bit of a mindset shift because I hadn't realized that until then. I was a bit like, oh, it depends. But actually, when I made myself this discipline and through guidance of actually every fortnight, regardless, I go, how much revenue is in? What's the percentage that has to go to the tax and super account? And what's the percentage that has to go to the profit account? And then it's not about I'll wait until the end of the year or wait until the end of the quarter to see if there's any profit there. I'm actually allocating it. And it's been a complete change because what it does is it depletes the operating account. So when it comes to me making a decision like, should I do another course and spend another couple of $1,000 on that? I'm like, oh no, because that's a bit low.
Exactly. Exactly. And I do the same personally and professionally. I read Profit First a very long time ago, and I use a loose version of that and help lots of our clients use that, which you've touched on with the third bank account. There's so many different bank accounts you can have depending on how many you want to spread it out to and what works best for you, because not everyone's the same. Some people might work really well with the two. Others need 6 bank accounts to put cost of goods stuff into, to put owner's pay into, to split that tax and GST and employee stuff like super. So that is important to know what bank accounts one person has may not work for you, and but always to have at least 2 so that you're not operating off what's in the bank account and I'll spend it all.
Love that because that's a tricky thing with GST, particularly for service-based businesses where we're collecting money that's not ours. So we've got to put it to the side. Otherwise, we get really confused and think
Yeah.
it is.
And I love that you do that sweep fortnightly. We help our clients do that fortnightly or monthly. Send them an email. Hey, your revenue was $10,000. Put aside 10% of that for your tax and 2% into your profit. And us sending that reminder is like, oh, yes, great. Someone is keeping me accountable and I'm doing it.
Oh, that's amazing. Because I'll be honest, I've got a reminder in my diary, but it doesn't happen specifically every fortnight. And I'll look at my spreadsheet and I'll be like, oh, it's been 3.5 weeks.
And but that's okay, and it doesn't impact how well your business is doing. That's what another mindset people have to get their head around, that they might struggle with the multiple bank accounts. Moving the money around doesn't impact your profitability. It just protects your savings buffer and keeps you covering your obligations. So if you have 4 bank accounts, moving the money to another one doesn't reduce your profit, for example. So people think, but I've taken it out or moved it. Or like you just said, oh, I did it 3.5 weeks. It's okay. You're just moving the money at a different time.
And as long as haven't spent it, I should say, it's fine. Absolutely. And I guess just to share with everybody, I didn't realize how much my brain was stressing about the upcoming quarterly bill, that I didn't know how much it was going to be until I actually started doing this sweep. Because then just all of that went away. And I was like, oh, because as soon as I'd been through a few cycles where I was like, quarterly bill comes in, money's sitting there, boom. I didn't realize it was one of those things that had been just sitting in my brain.
It makes such a huge mindset shift because it takes that stress off you, and you'll be so surprised how empowering it is when the bill is done and you go, done, paid. I have nailed it. Yeah.
Completely. Love that. So thank you for that conversation because I hope that's been helpful to everybody because yeah, it's real. First of all, we need to know these things like what are our obligations? Let's not be afraid of them. Let's know our numbers. And then what are some little simple systems? So thanks for sharing that tip. Okay, so we've talked about cash flow a little bit when we're growing, but what I'd love to know is, we talked that cash flow was the difference between the money flowing into your business and the money flowing out. And obviously, the timing around that causes some challenge. What are the warning signs? Are there warning signs that maybe something's not going quite right when it comes to cash flow?
Yes. There are so many red flags, and once you know them, they're easier to spot instead of avoiding them. So, like we've touched on, it's important to remember the GST isn't yours. You're holding it and you need to give it to the ATO. And it's a trap many business owners fall into, running the business by the bank balance and not popping money aside. So, a warning sign is you're using your bank balance to make business decisions without already having putting funds aside. So if you find yourself checking your bank balance before you're making decisions, this is a red flag or a warning sign that something is possibly going to go extremely wrong. So please don't forget to save for your taxes when you're in growth mode. It hits that much harder when you get a huge BAS or tax bill and there's no money in the bank, and that's easily avoidable financial stress. Another typical sign is when you feel like sales are going really well, but where is the money? This is a red flag. What you're selling might not be profitable. So, something like a service based business owner, you might run into if you don't have great systems and processes in place, is you're busy doing all the work and no one is sending out the invoices to your clients, like we've touched on. So, you need to make this a priority to help clear that red flag. Let's get the money in, let's follow up. It's important to show your clients that you value what you're doing and chasing the money in. So it becomes important to them, because if you're not chasing it up, it's a bit of a red flag. They're not going to prioritize paying you.
And I think that is where having a bookkeeper or somebody else supporting you with that can really stop you from any little mental story that might come into play. Oh, maybe they're not paying it because they think I'm expensive or whatever.
Exactly. Or they didn't like what I did. And chances are, most times, they literally just forgot and you haven't followed them up.
That's right. Okay. So when sales are going well, but where's the money might mean that you're either your pricing isn't profitable or you're not actually invoicing and chasing it up to get it in. Love that. That's a big red flag. And if you're using your bank balance to make business decisions, which I have been there, my hand up.
We all have. My hand is up. I'm like, yeah, yeah.
Yeah, absolutely. Okay, so we've talked about the two red flags, the two major ones, which are really, really helpful. So then is there like minimum financial reports that people should be running to make sure that those red flags are being identified or anything else? So what are the minimum like reports in inverted commas that people should run and understand or have explained to them?
Absolutely. There are so many reports, and it's always a case of it depends what your business is and what your sales platform is. But some important ones for nearly everybody, of course, your profit and loss. You absolutely need to be checking this regularly to get a good overview of the entire health of your business, not just those top line revenue figures. And being across what your BAS is looking like throughout the quarter, keeping your fingers on the pulse so that it's not that big shock when you get the bill and you don't have the money saved. And like I mentioned, we give our clients weekly or fortnightly updates on what this looked like. So if you're doing your own, you need to know where that BAS report is and how to run it and have a look if it's looking accurate. So you are across what might be coming up, keeping your finger on the pulse. And the last report I wanted to mention today is your accounts receivable report. If you have invoices where clients have terms and they don't have to pay straight away, run the report, keep an eye on it, check it every week so that you can know what your clients haven't paid you for and chase it up.
And I think that's the key part. Chase it up, take some action.
Yeah, lean on a bookkeeper so that it takes that awkwardness out and it's your bookkeeper chasing the money up. If that's something you really struggle with, that is something you should absolutely get help with.
Love that. And I guess, though, you explaining those three reports probably brings us back to our first question, which is why a spreadsheet can't do this for you, whereas an accounting platform can. I mean, is there a reason that you think or you use Zero? Like I use it myself, but I've used it for 10 years, so I haven't really compared it lately. What makes it awesome and recommended by you?
I used to use all of them for all of my clients. I had clients on, I won't say them all, but they're all the other ones. And I decided as a bookkeeping practice that it was taking too much time admin wise on our end to keep my internal processes streamlined for several different softwares because they all are a different way. And keeping up our education on those softwares because, again, things are always changing. So I stepped back. What is easiest for my clients to understand in terms of reports? What do we enjoy using the most? What do we feel is the best valuable software? And to us, that was Zero. It covers so many things. It keeps everything simple and it's not complicated, especially when you are doing your own.
Great. That's good to know as well. All right. Well, I feel like we've had such an amazing chat. But before we wrap up, can you share with us, say, the three most important financial habits and one takeaway that you want everybody to hear and action having listened to this podcast?
Okay, that's a really tricky question to narrow it down. You know me, I'll talk about finances and numbers all day. Three, one would be planning for cash flow and GST/taxes. save the money aside and knowing how much is coming up to pay. You absolutely need to have that financial habit. 2, regularly reviewing your reports and understanding them. These are your powerful tools to help you do the growing and the scaling and guide your decisions on when to push forward or when to pause, what's working, what's not, and outsourcing it. Just because you can doesn't mean you should. I'm a bit biased, of course, but I genuinely believe if you are great at doing the books, even if you are, have someone checking them over for you. And if you're wanting to grow and scale, why do you want to tie yourself to these tasks when a professional can do it for you and keep you across the numbers without you having to be down in the details when you're trying to be in that growth or scaling mode? So, they're my 3 things, financial habits, when you want to successfully scale. One takeaway, 2 really small things. If you're not using accounting software, get onto it. I can't stress that enough. And second, grab your profit and loss report. Find your revenue, expenses, and your profit. Know these. And if you already do, make sure you're saving some of that profit.
Love. Oh, so much good stuff there. Thank you so much. And I guess I just want to reiterate to everybody that, nobody's expecting you to understand how to do any of this or know how to do any of this.
Lean into support.
Absolutely. If any of it feels like icky or scary or anything like that, then there are heaps of people who can explain to you how to find a P&L, how to read it, what to look for, and all the things. I certainly use that support in my business. I have a bookkeeper, I have an accountant. Even though I have an accounting qualification, it's just not my jam staying up to date on it. And I don't want it to be filling my brain. And frankly, I want to be able to sleep well, knowing that someone's looking after it for me. So
Exactly. I'm an accountant myself and I have a tax agent doing my taxes. Like, seriously. Yeah.
absolutely. So if you're sitting there and you're probably not an accountant and you haven't studied it, how could you possibly know? So lean into that knowledge because it really is empowering. Lisa, thank you so much for our chat today. You've talked about an upcoming learning hub that you're re releasing soon. How can people learn about that? How can people connect with you and just follow all your goodness?
The Learning Hub, if you go over to my website, accountantforyou.com.au, which I'm sure Paula will link in the show notes. I'm so used to saying that myself, linked in the show notes. It has all the details to sign up to the waitlist and where that is. And I am on Instagram and LinkedIn and also my own podcast, Your Bookkeeping Matters.
We will definitely link all of that. I highly recommend everybody go and have a listen to the podcast as well, because Lisa's podcasts are all very easy to understand, educational type of conversations. So super helpful there too. Lisa, thank you so much for your time, for your generosity, and for chatting today.
Thanks so much for having me, Paula. I wish everyone could learn a little bit more about finances every week.
Yay. Thank you.